You've heard of trend lines, but you probably haven't heard of the surprising ways that professional traders at world-class trading firms use them. In this video, you'll learn the number one little-known strategy that combines 3 trend line techniques for maximum trading results. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn so you can grow your trading account.
We're really excited to dive in today because these are opportunities that work. They work in a couple different ways, and they work for a couple of very specific reasons, which we're about to cover. We really had a ton of fun putting this video together because we worked with a trader on the desk who has this really great reputation for trading trend lines, but he didn't really always have that reputation. In fact, kind of early on in his trading career, this trader was working to establish his consistency. You know, the first goal on our desk is always consistency, right? The first goal on our desk is always consistency. So this trader was particularly notorious for adding trend lines to his charts. So oftentimes when we'd be talking about an idea, you'd look over at his chart and it would look something like this. He joked that his philosophy was, if you draw enough lines, eventually some of them will work. But kind of this interesting thing happened. He started to study and analyze every single line he put on his charts, and he learned which ones made the most sense to him and which ones responded the right way. So one day he put up the biggest day of his career. A couple days later, he put up an even bigger day. When we kind of asked him to share what he was doing that worked so well, he jokingly kind of laughed and he goes, "Yeah, I'm trading trend lines." In reality, he'd been studying and getting better and seeing what worked and what didn't, figuring out why that worked, and everything started to pay off, and he was able to explain exactly what he meant by that trend line break. And he was willing to share with us, which led us to have this presentation, share 3 of his best trendline trading strategies. We can't get into the strategies without properly identifying an important trend line. And what he's shared and what we're using here is a 3-step process to stack the edges for strategies that we'll go into next. So not all lines are created equal. So let's start by qualifying a really good trend line. To start, there needs to be a distinct point where the trend line starts, where it makes sense for the trend line to start from. So we can't just look at a chart and draw trend lines on it. There has to be a starting point where it would make sense that the stock or the product that we're trading starts to trend from. On our desk, this usually is a fundamental change in a catalyst, but it can also be a shift in the setup, like this distinct shift in the price action. That's what we call that shift in the setup. It's any time that the way the traders that are participating in the stock or the futures product, anytime that there's a distinct change. Once we have that distinct point where a trend line could start from, we take a step back, we zoom out, and we make sure we're looking at least 60 bars on any time frame. So 60 candles, 60 bars, whatever you want to call it. If you're using 1-minute bars, that's about an hour of time. 2-minute bars, you're looking at 2 hours of time. 5-minute bars, you're looking at 5 hours. 15-minute bars, you're looking at 15 hours, or about 3 trading days. 60-minute bars, you're looking at 60 hours, so about 10 days. You can expand this out as needed as your time frames expand, but these are actually really common ways you'll see charts set up on the desk anyway. So that's why we need to see that 60 bar minimum on any time frame that you're trading. And these are actually pretty interchangeable on the time frame. So if you just take 60 bars, you can kind of get a good sense of the trend lines. So these tend to be the same across any product traded also. So that 60 bars can cover just about any product. Then it gets way easier for us to draw the trend lines. Third, we connect the first 2 major points. So the first 2 major points tend to be the first 2 distinct higher lows for a long, an upsloping trend line like we have, or distinct lower highs for a downsloping trend line. You'll notice we were talking about counter trend points initially, as we're identifying a new trend most of the time. So when we're thinking about a trend line, we're thinking about that counter trend initially, so that higher high, and then, but more importantly, those higher lows. Now, this is the part that gets most people hung up, and some people even really heated, the thing we're about to talk about. There are lots of arguments about wicks versus bodies. Here's a general guide we use on the desk. If the first candle, that initial candle that started this whole thing off, if it had a wick, we will connect the wicks. We will use the wicks. If it didn't, we'll use the bodies of the candle. So the wick versus the body is this discussion that centers around what our expectations are. And we ground our expectations with whatever data is actually there. When we look at that initial candle that all this is starting from, was it a wick or was it a body? This is just telling us information about how the stock is trading. So now we can press into the three strategies that we can use. But I kind of want to go back because people do get so hung up. They draw trend lines that look great, but then the price action doesn't respond to the trend lines in the way they expect. So the trend line just doesn't work, and they say trend line trading doesn't work. So let's take a step and let's set the stage on how to address this. Trend line trading is not about what is happening. It's not magical that a trend line is happening and, it's going to test that trend line and that's really going to work every time. That's not what's happening. Why it's happening and who is making it happen is going to identify what a trend line is and if the trend line will work. What a trend line is it's a line that measures a trend. The trend is created by why something is happening and who is creating that. So an identifiable series of higher highs and, again, that most important higher lows, that's created by traders. Why is it created? Who's creating it? Those are the stories of trend lines, not what is happening. The two things that we notice that can create the most consistent trend lines are passive buy programs for longs or passive sell programs for a short. And it's really driven by participants that are being a little bit moderately price sensitive. We have an office and down the street from our office are a ton of stores, right? The shoppers that shop in the stores on Fifth Avenue are not the people that are price sensitive. The price sensitive traders are the traders shopping at like Macy's or Dillard's or Nordstrom. Somebody that wants good prices and really decent quality. They're not bargain bin shopping, but they're not paying up too much either. So this concept can really quickly describe the trend lines we're actually looking for. When the price comes in, the buyers are going to act appropriately. There will be a little bit of extra demand. When prices go up, they're going to have some extra supply. They're not willing to pay up and chase for it. But when it comes in, they're willing to buy. They're not going to buy super aggressively and run it higher either. The trend is going to remain as long as the same participants are acting in the same manner. Why we had to set the stage was because this little insight was really the breakthrough moment that led that trader to have that breakout day and then have that follow-up breakout day later. It's also the insight that is going to lead to the next three trend line trades we're about to talk about. So the first one is just very straightforward. It's trend trading off a trend line. This is probably the most common use of a trade, is when there's a clear trend established, and we'll start by talking about a failed breakout, right? Something tried to break out and then tried again and failed. And that's where the new trend was established. We identified that range, it broke out, came back in, and then confirmed the failed breakout. Once it confirmed the failed breakout, that is where that new trend potentially started from. Then we get to come in and we get a distinct second point, that second lower high. We all of a sudden have that trend line that we can connect to. And then the key is just to go with it because nothing has changed. Something changed giving us this setup to begin with, that failed breakout. But then that trend line just keeps walking down and down and down. So our expectations for that trade is essentially that traders are going to short every time it comes up to that trend line. They're going to continue to short, continue to short, continue to short. That provides us with the trading opportunities we're looking for. What's really driving this, the why behind it, is because algorithms aren't people. If somebody puts on a sell program that's going to passively sell up into moves with a very distinct end to that program, that sell program's actually an algo that is going to lose on the last one. It's going to put on that trade every time that opportunity gets presented. Take it off when it moves favorably. But every time that happens, it's going to put that trade on until it stops working. It's going to lose on the last one, but that's fine. It won on all the other ones. So it's really going to think at the end of the day about all of those trades as one whole trade. It's not going to care about that last one because it's just going to lump it in with all the other P&L. The second trading strategy that we're going to have here is range trading off a trend line. So we're going to find an intraday range move with a trend. Like, a lot of times this is a pattern that will happen in low floats or something that's pulled back intraday, but it's actually very, very strong. It's a pattern we call the post and flag. There's this unique twist to it that we're going to cover, and it was one of those kind of supplemental scalps that was added by our trader who made a living by drawing trend lines on the chart. So he observed that one of his best trend line trades was not actually the line he had drawn, but the line that generally followed the price action. So what happened was he stopped predicting. He saw that initial flag, and then he would allow the price action to occur. And he didn't actually have to predict what was going to happen. The price action was predicting what was going to happen for him. So he traded based on that. So he would be in from really good prices. But then he noticed he could just basically flag trade that. So he'd buy in and sell up, buy in, sell up, buy in, sell up. It gave him the room to really just trade the range. Stocks are in range most of the time, even when they're trending. So if they're trending to the upside, a lot of times they're trending in a range. We can't trade everything this way. But when we can identify it, and really when the stock identifies it for us, which a lot of times occurs from a very specific setup where there's a distinct change, and then that first higher low gets put in. Afterwards, we have those two connecting spots, and then we can just look for the price action to follow that along. And it'll trade up and down and give us enough volatility that we can range trade a trend line. What we don't want to get into and what we have to avoid is when we're trading a range that's actually a consolidation. That's one little hiccup on this, because if it goes up and stops range trading and goes into a consolidation, remember the difference between a range and a consolidation is a range can last as long as it wants to. A consolidation is simply a range with a pending resolution present. So a lot of times that's a distinct change in the price action that's trading within a range. That's what we call a consolidation. That distinct change suggests that there is a pending resolution. So we don't take a consolidation trade off of trend lines. We take range trades off of trend lines. Our third and final one is one that is a little bit different, but it's so effective. And the trader that kind of brought us these strategies, that kind of worked with us on these strategies, I actually asked him if we could cut it, and he said, absolutely not. This is one that is so important to share. You really want to make sure that you're covering it. Anchored VWAP as a trend line. So let's think about what we think of with most trend lines. They use price. They really focus just on price, the price action, and the price action defines the trend line. Anchored VWAP is a trend line incorporating price from that defined moment that we talked about earlier, but then it also layers on volume. So when we were talking about this, when we were brainstorming this meeting, the entire idea here is that anchored VWAP can be this really effective trend line when used appropriately. And what's a way to use it appropriately? A day 2 with resistance becoming support on a first move lower into a 2-day VWAP. This is really just a classic day 2 setup, and the concept remains exactly the same as if we draw the line on the chart. We are not drawing the trend line. The VWAP from that key point, which is that day 1. So the day 1 has to have a big catalyst, it has to have a big move, it has to have big volume. The price action from that first day VWAP can guide us when we look at the anchored VWAP from that first day. It's actually a super effective strategy because all you're doing is buying into that trend line, very distinct stop below once the price action moves away, and you're moving your stop up as the price action works with you. All right, so we've talked about those 3, but there's actually a 4th, and it's my favorite. And there was a really good example of it the other day, and it was so clear to all of us when we were talking about it, we felt like we really needed to share it. So the number 4 strategy that you can use for trendline trading that you'll see traders on the desk use all the time is trendline break and retests. So this is when you have a trend line, it breaks, and it retests. This truly is a counter trend trade. But it's a big moment. That trendline break is always a big moment. But it's so frustrating sometimes to trade a distinct trendline break because what can happen so often is that it'll retest the backside of the trend line. And if you're trading the trend line break and your stop is the trend line, sometimes you'll even get stopped out. So you're going to let the trend line break happen, then let it test the backside of the trend line. And then you can take that easy scalp because it was kind of the last attempt of those traders that were trading with the trend. Once that trend line is broken and then it tests and it can't get back up with the trend line, they kind of know the trade's over. That gives us a really good scalp. You know, that backside of the trend line trade, it isn't for anyone. But it's a scalp I really like waiting for. And when we were brainstorming this, traders on the desk really liked that concept. So let's cover a couple key takeaways. When you start scalping or trading off of trend lines, you kind of might start trying to take trend line trades on their own, right? We just talked about those breaks of trend lines. And you might think about trend line trades in isolation, but there are just so many variables associated with those that it kind of becomes super important to understand what trade you're actually making and then use the trend line break as an add-on to that trade, like as an extra kicker for taking that trade. So we're not saying replace your trading with trend lines. What we're saying is use the trend lines as a check in your favor for a trade, because this stacks the odds in your favor even more. We like to adapt our trading a little bit to different market conditions, and for some reason, trend lines just tend to work better when there are more participants. So you want to make sure that the stock's in play to start, or the product that you're playing is in play to start. And then the little adjustments that you're going to make are really going to matter more on things that are in play. Otherwise, you're going to have more false trend line breaks. The more people that are trading something in play, the more in play a stock is or a product is. When you get that trend line to set up, more eyes are on that. It's going to work better simply because there are more people thinking and acting in the same way that you are. So when you can find really good in-play products and really good in-play stocks, they tend to respect trend lines a little bit better. Another thing we can't move on without covering is how do you exit on trend lines? Well, a general principle here is to scalp half initially and then draw a new trend line. We call this strategy just a very simple half and trail. So what you're going to do is you're going to exit the first half on a really distinct move, and then you're going to trail based on that new trend line. When a trend line breaks, all it's typically doing is establishing a new trend. So just trail along with the new trend. Again, when you're defining your trend lines, think about the actual trade that's setting up within that trend line trade that you're seeing. If you're looking to learn more about the types of trades to make and some of the time frames you can use to guide your own expectations for how fast the trade will work and then more importantly, what that trade might lead to, you can check out this video and make sure you're going through all 5 steps. They really may seem fundamental, but again, when we lay a really good foundation, we have something great to build on.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.